Very good evening to all of you. I hope all are well. So, we were doing the discussion of ITC and in which we have completed the block credit. Correct. So, we have discussed multiple situations in which the ITC is blocked, out of which we have discussed one thing regarding the 17.5H, which talks about goods that has been disposed of by way of the gift, goods that has been disposed of by the free sample, lost, stolen, destroys, or write-off. So all these, if you have taken the input tax credit, then you need to reverse your input tax credit. If you have taken the ITC and finally you are disposing of the goods, your goods has been lost, write-off, disposed of by way of the free sample, gift, etc., then you need to reverse your input tax credit. Regarding that, we need to understand the circular 92, which has been very good circular to understand the sales promotion scheme. Very good evening, Viraj, Shailesh, and everyone. Circular 92 has clarified the entitlement of ITC in the hand of the supplier in respect to the various sales promotion scheme. Taxability of the scheme has been discussed in the chapter 1, that is supply chapter, and also in the value chapter, valuation of the supply. I hope you all have completed the value of the supply chapter. Let me discuss once again. Sample and free gift. So the point is sample which are required free of cost, okay, without any consideration. So when we use the word without any consideration, then immediate point which should come into your mind, that is schedule 1. What should be the point which comes into your mind? That the transaction which are having without consideration, it cannot be the supply except schedule 1. Now, so it says that if it is without consideration, then it cannot be qualified as the supply except schedule 1, that we all know. The ITC shall not be available to the supplier. ITC shall not be available to the supplier on the input service and capital goods. ITC shall not be available to the supplier of every component to the extent they are used in the gift of free sample, correct? Distributed without any consideration. Now suppose I'm asking one thing, that suppose your outward supply, let's say you have taken the gift to your employee on this Diwali occasion, and let's say the value of the gift is rupees 60,000 per person. Please tell me, the gift of 3,000, will it be taxable in the hand of supplier or not? Let's say I am a company and I am giving the gift to every employee worth of rupees 60,000. Will this gift of rupees 60,000 be taxable or not? Question is very clear. Now, see, by this point, I will try to explain the relation of schedule 1 versus 17 subsection 5 clause H, reversal of ITC block credit, gift, free sample, etc. Primarily, I do agree that if the transaction is not covered in the schedule 1, it will not be the supply. Plus, ITC would also be blocked. But this circular 92 says, if your outward supply, free wala supply, has been covered in the schedule 1. It is being covered in the schedule 1. Therefore, the free gift sample, etc., you are entitled to take the ITC. In the current example, gift to my employee is worth of rupees 60,000. Will it be supply? Answer is yes. Para 2 of the schedule 1 talks about that any supply of the goods or services between related person or between distinct person is a supply, and the proviso says up to 50,000, it is not a supply between employer to employer. Now, because I have given the gift worth of rupees 60,000, it will be supply. It will be supply. And because it is a supply, then I am entitled to take the ITC. It is not blocked in 17.5H. Let's go and read the relevant extract of the circular. It says, ITC shall not be available. Prima facie, ITC shall not be available. Fully agree. But if the activity of distribution of the gift or free sample fall within the scope of the supply on account of the schedule 1, the supplier would be eligible to avail the ITC. Very, very important point. This point is very, very important because normally we know that schedule 1 and 17.5H. The 17 subsection 5 is starting with the notwithstanding anything contained. It is starting with the word notwithstanding anything contained. It means this provision is overriding provision. Agree with me? 17.5 ka language is notwithstanding anything contained in 16.1 or 18.1. It means the provision of 17.5 are non-obstant clause. Non-obstant clause. It means it will override the other provision 16 and 18. You cannot take the ITC. Therefore, this circular has given the very clear picture that if someone becomes supply, if some transaction becomes supply, if by virtue of the schedule 1, you are paying the GST, then will you take the ITC? The doubt was because 17.5 is starting with the word notwithstanding anything. So finally it says that supplier would be entitled or eligible to avail the input tax credit. I hope it is clear. एक बार confirm करें. This point is clear to all. I hope. Please confirm once. Now I am moving to the buy one, get one free offer. What is the point? We are talking about the same circular. In the same circular, the second point is buy one, get one free offer. Correct, hai na? So it will be taxable and therefore ITC would be available. So let's move to the next point. Buy one, get one free offer. So primarily I can say if something is free, then 17.5H will come into the mind that because clause H says that gift or disposed of free sample, etc. ITC not available. So what is the doubt in this transaction? Because one buy one, get one free. It means 1 plus 1. It means second item you are giving the free. Then second item you are giving the free. Then the question is, will the ITC of the second item be available or not? That was extremely, again, I can say very good example or situation which has been covered by the circular 92. Now, it says that this is not an individual supply. This is not that you are giving the one item as a free of cost. No, it is two or more individual supply where the single price is being charged. It is two or more supply where single price is being charged. It can at best be treated as supply of the two goods for the price of one. If we are saying two goods for the price of one, what will come into your mind? आपके माइंड में क्या आएगा? We have discussed the one concept, two or more taxable supply, which are two or more taxable supplies which are supplied in conjunction to each other. You remember that we have discussed that the concept of two or more taxable supplies which are supplied in bundled. Two or more taxable supply which are supplied in bundled. What is that? This circular says it is not individual supply of the free goods. Then what? It says that you are basically supplying the two item for one price. It means, in other words, I can say I am making the two or more taxable supply for which single price is being charged. I like to draw your attention regarding the concept which we have discussed in the initial chapter, composite supply and mixed supply. Anyone who remember the concept of composite supply or mixed supply? I hope you all remember the concept of composite and mixed supply. एक बार मुझे confirm करें, so that first I will check that what is the understanding level with this. Then we are going to read again this particular provisions. Please note, last two classes, majority it would be on practical of ITC. So today and tomorrow we will complete theory. Almost we will complete theory part of this ITC chapter, and balance two class. Majority would be practical and little bit would be theory. So make sure the class on Tuesday and Thursday, please ensure to attend the class on Tuesday and Thursday. What we have discussed in the composite and mixed supply, I like to ask, can you please tell me the difference between composite supply and mixed supply? Can you please tell me the difference between composite supply and mixed supply? Can you please tell me the difference between composite supply and mixed supply? Remember, very nice, very nice. So tell me the difference between composite supply and mixed supply. Tell me any. I like to understand 3 points from each one of you. Whatever you remember, please tell me what is the composite supply, what is the mixed supply. Yes, क्या बात है गीता. Very nice, Geeta Kalidas Patel. Very nice. Composite supply. Oh, you have given two answer. Two differences you have given. You have given in the reply the two answer, two line item. Can you recall one more difference is there? Correct. Mansa has given one more component correctly. So first point I can tell that it is naturally bundled. It is naturally bundled. And it is not naturally bundled. Not naturally bundled. It means one is principal supply and rest are ancillary. One is principal supply and rest are ancillary. But in case of the mixed supply, it is not the composite supply. It means not necessarily there is element of the principal supply there is element of ancillary supply, might be all are equal. Might be all are equal. What is the rate of the taxes? The taxes would be applicable, which is applicable on the principal item. And here, highest tax rate would apply on the entire combo. Let's say one more difference I like to understand. If I like to say one more difference, I can say fourth one, that price can be single or price can be in a different, matlab separate. The price can be single, price can be separate, or even there can be no price for the ancillary item. Not possible. Here the entire combo should be sold in the single price. Entire combo should be sold in the single price. If there's a mixed supply and you are charging separate individual value for the each component, it cannot be the mixed supply. Clear? I hope it is clear. Not relevant for this topic, but yes, at least we have revised some component of another topic, some part of the another topic. I hope this is clear to all. From I can easily understand from each one of the answer. Absolutely correct. I have just summarized once again. Okay. No problem. Now let me go back to the circular, and the circular says that it will be treated as supply the two goods for the price of one. So what I told you, that in the composite, there is no condition for the price. It can be single, it can be separate, or it can be no price for another taxable item, second or more taxable item. But in case of mixed supply, there is a condition that it should be single price. So it means if they are charging single price, it can be the mixed supply or it can be the composite supply, depend upon the nature of bundling, depend upon the presence of principal and ancillary supply. Multiple point we have to arrive at. Then only you can say it is composite or mixed. But answer is, it is not individual supply, and therefore it is not individual supply, and therefore it is not individual supply of one goods. You cannot say I am making one item as a free supply. No, it is supply of the two or more taxable item, out of which you are charging one price. So in the composite, there is no condition for the price. So even if it is one price, it can also be the composite. And mix, there is a condition that price should be single. So if the price is single, that combo may result into the composite or may result into the mix. Okay. Then it says that taxability of such supply will depend upon as to whether the supply is the composite or mix, and the rate shall be determined as per section 8. What is the section 8? We have discussed that it would be on the rate would be as applicable to the principal supply will be applicable to the entire combo if my transaction is composite supply. Right now, if my transaction is mixed supply, then whatever the rate applicable to each of the component, highest tax rate would be applicable on entire combo. Correct? So we have done the revision of this particular concept. Now the ITC shall be available in relation to supply of goods or services as part of such offer. It means you are entitled to take input tax credit. You are entitled to take input tax credit for both component. Both component means you cannot say it is a free supply and therefore there is no requirement of reversal of common input tax credit. Now, buy more, save more. Now, I remember that there is a one section in the value of the supply. So, as you told me, that valuation chapter is completed. Am I right? Valuation chapter is completed. So, in the value of the supply chapter, I am saying that there is a section 15, 1.5. there is a section 15 which talks about, let's say 15 subsection 3, which talks about treatment of discount. First point is very clear. Clause A is talking about discount has been given at the time of supply. Discount has been given at the time of supply itself. And clause B is talking about after the supply. So in this particular third point, we are talking about buy more, save more. Additional discount has been given. Whenever in the GST, we are talking about the treatment of the discount in GST, we have to refer this section always. Now, you tell me, if discount has been given at the time of supply, what would be the value? You have to give me the answer that in this situation, if the discount has been given at the time of supply, what would be the value on which I need to charge the GST? On which I need to charge the GST? What could be the value on which I need to charge the GST? Second, please also tell me, if I am giving the discount after the supply, then what is the GST impact on this? What is the GST impact on this? So after deducting discount, GST is to be charged. Clause A, I have received the correct answer. What is the correct answer? As Geeta Kalidas Patel has replied that the GST will be charged on the gross value or net after discount. Net value after reducing the discount amount. After reducing the discount amount. ठीक है. After reducing the discount amount, you will charge the GST. So it means I can say, in other words, discount will be excluded from the value. If it is after the supply, then what is the GST impact? This is important. This is important and slightly tough. If it is after the supply, then what is the GST impact? No, that answer is not sufficient. Discount after supply GST applies. No, that is not correct answer. If the discount has been given after the supply, if the discount has been given after the supply, then if the two conditions are satisfied, if the two conditions are satisfied, one condition is with respect to agreement, second condition is related to the, it is linked to the relevant invoices, plus ITC has been reversed by the recipient. If these two conditions are satisfied, then the 15(3)(b) says discount will be excluded from the value. How it can be excluded from the value? Because you have already raised the invoice for the gross amount. They are saying raise the credit note of GST. Raise the credit note of the GST. Then suppose if any condition not satisfied, assume that if any condition not satisfied, if any condition not satisfied, then what? Then can you issue the GST credit note for this post-supply discount? Answer is no. You can't issue the GST credit note. If it is not the GST credit note, तो उस document का नाम क्या होता है? What is the name of that document? Financial or commercial credit note. Always remember, if because of any provision of the GST, you cannot issue the credit note by charging the GST. In that case, you will issue the credit note without GST, and credit note which is without GST, उसका नाम क्या है? फाइनेंशियल क्रेडिट नोट और कॉमर्शियल क्रेडिट। यहां तक बात क्लियर है? इज इट क्लियर टिल नाउ? Is it clear till now? You will read, you will find almost same thing what we have discussed in detail. Discount offered by the supplier to the customer, including staggered discount. It means, let's say you are buying 10, you are buying 10,000, I will give 10% discount. You are buying 15,000, I will give you 15% discount. So the discount has been divided in the staggered manner. In that case, what happened? The post supply or volume discount, if it is established as per section 15 subsection 3, then discount amount shall be excluded from the value. When it will be excluded from the value? If the condition of section 15 subsection 3, and very specific, I can use the word clause B, satisfied, then I can say that the discount will be excluded. And how it will be excluded? So this is the theory term that you will exclude the discount from the value. But I have raised the tax invoice on the full value, and now you are saying discount exclude from the value. It means I will issue the GST credit note, because if I am a supplier and I'm issuing the tax invoice, I will pay the tax to the government. But if I will issue the GST credit note, if I will issue the GST credit note for the future period, in that case, the credit note, GST component of the credit note, it will reduce my outward tax liability. It will reduce my outward tax liability. Clear? However, the supplier shall be entitled to avail the ITC for such input service and capital goods used in relation to the supply of goods or services on such discount. ठीक है. Now, the last component is secondary discount. Same concept. There are the discount which are not known at the time of the supply. After the supply is already over, such discount shall not be excluded while determining the value. There is no impact. Shall not be excluded while determining the value or otherwise of the ITC in the end of the. Therefore, there is no impact on the availability or otherwise of the ITC in the end of the supply. So I can say, if condition are satisfied, then no problem. I will allow to reduce my value, and I am entitled to take my ITC. Suppose next, if it is not by virtue of that condition, then I will issue the financial credit note, not the GST credit note. And in that case, I am not entitled to take the input. So there is no impact on the availability or otherwise of the ITC in the end of the supplier in this case. Why? Because they are talking about the supplier in this case. ITC reversal when return of the time expired medicine drugs are treated as. So because supplier has not reduced the value, see, he has paid the taxes. He has paid the taxes on the gross amount. See, try to understand. I hope there may be some confusion. I am a supplier, and now because of the discount, I have not reduced my taxable value. So it means I would be entitled to take the ITC. There is no impact on the ITC in the end of the supplier. ITC reversal when returns of time expired medicines or drugs are treated as fresh supply. So this is one of the circular 72, which has clarified the process for time expired medicine. So the time expired medicine are treated as fresh supply. So let's say A has supplied the goods to B. A is a manufacturing company of the pharmaceutical. B is the distributor. Okay. Now the medicine is expired. So he will return the medicine to A again. But the question is, what about the ITC impact on this time expired medicine that we are talking about? the common trade practice in the pharmaceutical sector is that the drugs or medicine are sold by the manufacturer to the wholesaler, by the wholesaler to the retailer on the basis of tax invoice, or if it is exempted, then bill of supply. Such goods have a defined life term, which is normally referred as date of expiry. Such goods which have crossed their date of expiry are referred to as time expired medicine and are returned back to the manufacturer on account of the expiry through the supply chain. Now, Circular 72 has clarified that a retailer, wholesaler can return the time expired either by treating the fresh supply or by issuing the credit note. What is the meaning? A is a manufacturing company, B is a distributor. Okay. So when he is returning the goods, there is two options. Point to be noted, there is two options available. First is credit note can be issued. In GST, there is a provision section 34, subsection 1, which talks about the credit note can be issued by the supplier. Who is a supplier? A is a supplier or B is a supplier? Obviously, A is a supplier because A is a company. He has supplied the goods to B. Now, B can issue the credit note for return goods. Okay. Or let's say A is not interested to issue the credit note. Or practically, the time limit to issue the credit note, which is given in 34 subsection 2, has crossed. Then what to do? A cannot issue the GST credit note, and as a result, what is the second option? Second option is B can treat the same as a fresh supply. If B are treating the same as a fresh supply, then B will raise the tax invoice or A will take the ITC. Correct. Now, in case the person returning the time expired goods is a registered person other than composition. Why other than composition? Because in case of the composition, bill of supply will be issued. Time expired goods, he may at his own return the said goods by treating as fresh supply, and thereby he will issue the tax invoice. The value in the invoice either may be taken as the value of the such return supply. So originally at cost, whatever the purchase price was there, then B can use the same price as sales. Wholesaler or manufacturer who is the recipient shall be eligible to avail the ITC, subject to the 16, 17, 18, that all other condition would remain same. Now the second part, it is not completed. Now, the time expired medicine is a composite dealer. So now if he is a composite dealer, then what would happen? What about the ITC provision for circumstances like Maggie? When company recall its own product for market due to the bad quality, ITC provision? You can compare the same with this particular time expired medicine. You can compare the same with this particular time expired medicine. Very relevant example. Very relevant example. And I can say, in my view, it is exactly same whatever we have discussed or whatever we are going to discuss currently. क्या बात कर रहे हैं हम? We are talking about एक मिनट दीजिए, that if time expired medicine has been returned, then it can be treated as a fresh supply or supplier can issue the credit note. Okay. Then if he is treating the fresh supply, what could be the value? He can take the value as per the value as he purchased. Then he talk about that if the customer is composite dealer, then what? If the customer is a composite dealer, then what? In case the person returning the time expired is a composite dealer, then he may return the said goods by issuing the bill of supply and pay the tax at the rate applicable to the composite tax rate. Trader or manufacturer of the goods, it is 1%. Because currently we are talking about the goods, so either he will be the trader or the manufacturer of the goods, so the 1% rate would be applicable. In this scenario, there will no ITC to the recipient of the return supply. Obviously, yes, because composite dealer cannot take the ITC, cannot charge the tax, and recipient of that particular supply obviously cannot take the ITC. In case the person returning the time expired goods is an unregistered person, returning the goods is an unregistered, he may return the said goods by issuing the commercial invoice without charging any tax on the same. Where the goods returned by the retailer or wholesaler treated as fresh supply, correct? Now, let's say Maggie company is destroying that goods. See, when it will be, so you have asked very relevant question, then Maggie called back by the, from the retailer, distributor, everyone. So either they can return on the basis of the tax invoice credit note issued by the Maggie company or Nestle, or it can be as a fresh supply by the distributor to the Nestle. What? Two way. And third, if it is a composite dealer or if it is unregistered, all component we have discussed. Now, when Nestle will destroy that goods because the quality is not correct, because of the medicine are expired. When the goods returned are as a fresh supply are finally destroyed by the manufacturer, then 17.5H will come into the picture. He has to, that Maggie company or that medicine manufacturing company has to reverse the input tax credit. It is pertinent to mention here that ITC which is required to be reversed is the ITC availed on the return supply and not the ITC that is attributable to the manufacturer of such time expired goods. Let's say manufacturing cost is rupees 10, and then when he is returning, the trader who is returning the goods and is issuing that tax invoice, and let's say he has raised the tax invoice by 15, then the ITC would be reversed by that manufacturing medicine manufacturing company, which is charged on rupees 15 and not that ITC attributable on the manufacturing of the such goods. This clarification may also be applicable to return the goods for the reason other than time expired. I hope it is clear. Now, whereas your question is very, very relevant, but it is exactly similar. So I have clarified. If you have any counter question, kindly raise. Let me start with the section 18. So they've used the word credit and in special circumstances. Why they are saying special circumstances? Because normally. So you tell me what could be the way I can take the ITC? What could be the way that I can take the ITC? What could be the possible way I can take the ITC? In the government portal I'm talking about. Requesting everyone to give the answer. Geeta, Viraz, Prerna, Sneha, Mansa, Salish, everyone. In the government GST portal, common portal, to whom we are calling as a name as a common portal, www.gst.gov.in. The one normal way would be add the ITC in GSTR 3B. Once you take the ITC in 3B, it will be credited in electronic credit ledger. So there would be the electronic cash ledger, electronic credit ledger, and electronic liability register. So which you will discuss in the invoice accounts and record chapter: electronic credit ledger, electronic cash ledger, and electronic liability register. When you take the ITC in the GSTR 3B, so basically what it is doing, they are crediting the amount in the credit ledger. Or when you use the ITC for discharging the tax liability, again in the GSTR 3B, then they will debit the electronic credit ledger. It means first they have increased the value because you have taken the ITC. Then when you are using for the payment of tax, then value of the credit ledger would be decreased. Clear? ये बात तो सभी को समझ में आता है. It's like a bank passbook. When you deposit the amount and when you withdraw the amount. So likewise, same. Now section 18 talks about ITC in case of special circumstances. ITC in case of the special circumstances means you are not taking the ITC through GSTR 3B. Why? Because at that point of time, I am not registered person. I was unregistered person. Can I take the ITC if I'm unregistered? Can I take the ITC if I'm unregistered? Can I take the ITC if I'm unregistered? The answer would be no. I can't take the ITC if I'm unregistered. Now the 18 subsection 1 is mentioning the 4 category of the transaction. We will discuss 18.2, we will discuss 18.3, etc. But in case of the 4 special transaction, and wherein section 18 is allowing to take the ITC. Section 18 allowing to take the ITC. But because you are unregistered, so 3B cannot be filed. That transaction is not appearing in your 2B. So now we can say if the transaction is not appearing in 2B, can you take the ITC? Answer is no. If you are unregistered, can you see your GSTR 2B? Can you file your GSTR 3B? Answer is no. And also, at the beginning of this chapter, we have discussed one concept. That for taking the ITC, one should be registered. If I'm unregistered, according to section 16, I cannot take the ITC. Now the section 18, which talks about ITC in case of special circumstances. Why special? Because at the time of purchase of that goods or capital goods, when I purchased these goods or capital goods, I was not registered. And therefore, it is not appearing in 2B and I am not able to file my 3B. But the circumstances which has been given in the 18 subsection 1, clause A, clause B, clause C, and the clause D, I would be entitled to take the ITC. Now the question is how the ITC can be taken. So they have given certain forms. ITC 01, ITC 02 for reversal of the ITC, ITC 03, ITC 02A. That these forms are there. Again, it is not relevant. The form number are not relevant. But why I am saying? So you should understand the concept. Suppose A file the ITC 01. Let's say by rupees 1 lakh CGST, 1 lakh SGST. Then this amount would be added in the electronic credit ledger. If I'm saying added means it will be credited in the credit ledger. In the GSTR 3B, when you are adding the amount, it will be credited in the electronic credit ledger. Same concept when you are filing the form ITC 01 and ITC 02. Amount of ITC will be added in the credit ledger. It means it is credited when you are using for payment of taxes, or when you are reversing the ITC through ITC 03. The input tax will be reduced, credit ledger will be reduced. Now we need to discuss what is the provision of 18 subsection 1. But before that, let me give you the summary. What is the concept of 18.1? In 18.1, we will discuss 4 major points. If at the time of purchase you are unregistered in all circumstances, but now you have taken registration within 30 days. So I am, and that goods which I have purchased is lying in my stock. Now, because I have taken the registration and now I sell the stock by paying the GST, I am unregistered when I have purchased the goods. But now within 30 days, because of any date, I am become liable to take the mandatory registration as per 22 or 24, or I am become registered because of the voluntary registration. Then we will discuss the concept of effective date of registration. Whatever the stock which is lying on the effective date, a stock which is purchased when I was not registered. It was purchased when I was not registered, and if the supplier is charging the GST and that stock is still lying in my hand in my date of converting, in that case, whatever the GST component are there on the stock, I would be entitled to take ITC. Currently, I am just giving the overview because actual provision I will start in some time. Actual provision we will start in some time, but as of now, I'm giving only overview. So you will find some input word there, some capital goods were there, some finished goods WIP word would be there, some concept of 2 year would be there, that 1 year would be there. We will discuss all this permutation combination. Now, third thing is saying, if you are registered under composition levy, we all know that we can't take ITC, but you're converted to the regular category of registration. And on the date of conversion, there was some stock on which you have paid the GST. You can take the ITC. And last is, you are providing the exempt supply. But now that supply has become taxable. On the date of conversion, whatever the stock is there, GST paid stock is there, you can take the ITC. These 4 points we are going to discuss in detail one by one. Meanwhile, if you have any question, kindly ask. Any question, please ask. So then we will read 18 subsection 1, all the 4 clauses. चलो सर स्टार्ट करते हैं. Credit in special circumstances that we have started. Let's read the clause A. So try to understand by taking 3 dates. The date first is 1st November. This is my date of liability, DOL. What is the DOL? Date on which I am liable to take registration. Either by virtue of the 22 or by virtue of the 24. So I am become mandatory liable to take registration. What is the time limit? I have to make the application within 30 days. As per the section 25, I need to take the registration within 30 days. So perfect. I have applied the registration within 30 days. Let's say I have applied the registration on 25th November application. So it is date of application. Let's say certificate has been granted on 6th of December. This is my base on which I will explain clause A and the clause B. So 6th December is my date of registration. So I've used 3 terms. Date of liability, date of application, and date of registration. If date of application is within 30 days, if date of application is within 30 days, then effective date of registration, effective date of registration would be the date of liability. So what we have understood? We have understood if the application has been made within 30 days, then my DOL become the effective date. Now read the clause A. You will have the better clarity. A person was applied for registration under this act within 30 days from date of liable to take registration and has been granted such registration on 6th December, shall be entitled to take the credit, okay, of input tax held in the stock, semi-finished or finished goods. He can take the ITC only on, goods, not capital goods, not input service. It is saying that credit of input tax in respect of input held in stock, input contained in semi-finished goods or finished goods held in stock on the day immediately preceding the date from which he become liable to pay the tax under the provision of this act. He can take the ITC of the stock, which is lying on the day, which day? Immediately preceding the date from which he become liable to pay. So effective date of the registration would be date of liability. Whatever the stock are there before the date of liability, he would be entitled to take the ITC. Correct? Let me repeat once again, entire provision. If date of application is within 30 days, then the stock, it can be raw material, it can be finished goods, or it can be WIP. The stock lying in the hand preceding date of liability. See, because you have applied within 30 days, so they are saying stock which is lying in your hand before the date of the liability. You can take the ITC. Now, if it is after 30 days, then what? We will read the provisions. Then it says that a person who has taken voluntarily registration, 25(3) is talking about the voluntarily registration, shall be entitled to take ITC from date of liability, date of application, or date of registration. Because in case of the voluntarily, the liability, date of the liability would not come because he is not liable as such. So, will the date of application he would be entitled to take the ITC, the date of the registration? They are saying date of the grant of the registration immediately preceding the date of the grant of the registration. A person whose registration registered under 25(3) shall be entitled to take the credit of input tax in respect of input held in stock, input contained in finished goods, or semi-finished goods held in the stock on the day immediately preceding the date of the grant of the registration. What is the date? Can you tell me? I have used 3 dates in my example. 1st November, then I used 25th November, I have used 30th November, I have used 6th of December. Please tell me, in the clause B, I would be entitled to take the ITC of the stock which is lying immediately preceding 1st November, 25th November, 30th November, or 6th December. Kindly give me the answer.
1st November. 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 1st November.
Absolutely correct. The answer is 6th December. Perfect. Perfect. Fully agree with all of you. The answer is 6th December. Okay. So let me go back to the provision. Where any goods, where any registered person cease to pay the tax under section 10. Cease to pay the tax under section 10, it means section 10 is the composition levy. When he ceased to pay the tax, it means he has switched to the section 9. What is the section 9? Regular category of registration. Any registered person ceased to pay the tax under section 10, he shall be entitled to take the credit of what? Immediately preceding the date on which he is liable to pay the tax under section 9. Here, the important point to be noted that input held in stock, semi-finished or finished goods, and on capital goods. Here, you please understand that in clause A and the clause B, we are talking about only goods other than capital goods, input. And in the clause C, we are talking about input plus capital goods. Input plus capital goods. It means, try to understand one point. See, difference whether input means, give me the one answer. Input means only goods. Input means only goods or goods other than capital goods. Input means only goods, या goods other than capital goods, या goods and services both. My point, so there is three options, A, B and C. Please select correct one. Please select correct option. What is the meaning of input? Input means goods only or goods other than capital goods or goods and services both. What is the meaning of input? Kindly. A, B, C, D. What is the correct option? Try to understand. There is three terms which has been defined in the GST. One is input, one is input service, and one is capital goods. One is input, one is input service, and one is capital goods. These are the three terms which you should remember. The word capital goods, it means goods which has been capitalized in the books. Goods which has been capitalized in the books. And what is the definition of input? Input means goods other than capital goods. And services, input services means any services but other than goods. Clear? Input means only goods, but that will also not include capital goods. So the right answer is goods other than capital goods. What is the meaning of input? Input means goods other than capital goods. It is not including services. It is not all goods. इज इट क्लियर? क्योंकि रॉन्ग आंसर, रॉन्ग आंसर, रॉन्ग, रॉन्ग, फोर आर रॉन्ग एंड Geeta and Kirti, they have given the correct answer. Geeta and Kirti has given the correct answer. Goods other than capital goods. Okay. So, where any registered person cease to pay the tax under section 10, he shall be entitled to take the credit in respect of input. In respect of input, it means they are not talking about the capital goods. But further, they are saying, input can be raw material, can be WIP, or can be finished goods, but it should be stock. They are not talking about capital goods. Here, they have added the capital goods. It means in the clause C, you are entitled to take the ITC of input and capital goods. But in the clause A and the clause B, kindly underline the word. They have given only input. They have only given the word input. It means no capital goods, no capital goods. ठीक है? Whenever we are talking about the capital goods, it should be reduced by such percentage point as may be prescribed. We will discuss certain rules are there. Rule 42, Rule 44. We will discuss certain rules in the bottom. That what is the meaning of that reduced percentage point? Because suppose I am switching from composition to regular, let's say after 6 months. Let's say. So whatever the ITC in the capital goods, I would not be entitled to take full ITC because I have used 6 months in composition. Before that, please clarify one more doubt. Please clarify one more doubt. Answer to this question. ITC on the capital goods can be taken immediately or must be taken immediately. I'm saying, I'm using the word must be taken immediately. What is my question? My question is ITC on capital goods. I'm not talking about section 18, normal case. If I am registered, I have purchased the capital goods, it must be taken immediately or it must be a portion in 5 years or I have the choice either A or B. My question is ITC on the capital goods. Suppose I have purchased, I am a recipient, I have purchased the capital goods. It has to be taken immediately. It has to be a portion in 5 years. Or I have the choice A or B. Give me the answer. Kindly give me the answer whether I have the choice immediately taken in the first year or can be a portion in 5 years. What is the answer? Because I'm trying to develop the concept by this question. Oh, again, I'll just wait for a couple of more reply. So as of now, right answer is by Aniket Jain. Only right answer by Aniket Jain, and not satisfied with the rest of the reply. Let me see. I have received very few reply. Let me see some more reply. Probably you have given the answer. Let me see some more reply. But my question is, ITC on capital goods must be taken immediately, must be a portion A, B, or C. C is either A or B. I have the choice. That was my question. What about other participants? Prerna, Mehul, Mohammad Abdul, Chitala, Viraj, where are you? कहाँ पे हो सब लोग? Mansa, Sailesh, waiting for your reply. Yeah? The right answer is, the right answer is must be taken immediately. Must be taken immediately. Must be taken immediately. The right answer is A. It means you do not have any option to carry forward in the 5 year. Why? Because we know that there is a 16.4 time limit to take the ITC. If you have the tax invoice of a particular financial year, you can take maximum till November of next year. Can you take after that? Answer is no. That will be the lapse ITC. You can't claim at all. You can't claim at all. So what is the concept of 5 year? 5 year is if you have taken the ITC on the capital goods. Remember this. If you have taken the ITC on the capital goods and you sold that capital goods prior to 5 year, you sold that capital goods prior to 5 year, or you have converted your number from composition to regular, then the concept of reversal of ITC, reduction of the ITC would come. That for that purpose, we will look into 5 year or 5%. But otherwise, the ITC has to be taken immediately. There is no possibility that I can carry forward this ITC because of the 16.4. Now the next and last clause, where an exempt supply become taxable, then then person has to be entitled to take the ITC in respect of input held in stock, input contained in semi-finished goods or finished goods, and on capital goods. And for the capital goods, same line would be there. What is that line? Capital goods credit on the capital goods shall be reduced by such percentage point as may be prescribed. So for that, we will discuss in some time 5% per quarter. Now, whatever we have discussed in the clause A, clause B, clause C, clause D, for 18 subsection 1, it is saying that not be entitled to take the ITC after the expiry of 1 year from the invoice. It means if that stock, if that capital goods is being purchased by that person older than 1 year, before 1 year, if that stock or semi-finished goods or finished goods or capital goods is being purchased, whatever the material or packing or processed material is required, that has been purchased before 1 year, older than 1 year, then that invoice, you can't take the ITC in 18.1. Now 18.3 is talking about the reverse situation. Reverse means not reverse, sorry. 18.3 is talking about you have converted the constitution either because of the sale, merger, demerger, amalgamation, lease, or the transfer. The said registered person shall be allowed to transfer the ITC which remain utilized. So let's say the Air India has been sold to Tata, then this sale is exempted in the GST. There is no tax liability on the sale, merger, demerger, amalgamation, lease or transfer of the business. There is no, this transaction is not taxable in the GST. It is made exempted. If it is exempted, then what happened to my ITC? What happened to my ITC? 18 subsection 3 says that whatever the ITC is there, you can use one form and you can transfer the ITC from this entity to the new entity. It says that ITC which remain unutilized in his electronic credit ledger to such sold, merged, demerged, amalgamated in such manner as may be prescribed. Okay. We will discuss what is the manner which is being prescribed, but there would be the form. 18.4 is basically talking about opposite of 18.1C and opposite of 18.1D. What is the C? C means composition to regular. D means exempt to taxable. So clause C saying you were registered in section 10. Now you are ceased to pay the tax in section 10 and you are converted into the section 9. Now you will pay the actual tax. Section 10 says that ITC on input plus ITC on capital goods reduced by such percentage, you are entitled to take the ITC. And this clause D says if you are dealing in the exempted item, now this item become taxable. We know that 17 subsection 2, 17 subsection 3, that if you are making the exempt supply, then you cannot take the ITC. If there is some exempt, some taxable, you can take the ITC to the extent of taxable supplies. We have discussed. So currently my supply is exempted. I won't be able to take ITC, but if it is become taxable, from exemption to taxable, I can take the ITC of the stock plus capital goods. Okay. Now 18.4 is talking about reverse situation. Taxable become exempted or section 9 becomes section 10. Then obviously you will reverse the ITC. One point is clear. If I am dealing in the taxable, that supply become exempted, I have to reverse my ITC. Where any registered person who has availed the ITC because he is registered under the regular category, now he has opted to pay the tax under composition, or where he was dealing in the taxable item become now it is become fully exempted, then pay by way of debit in electronic credit or cash. So he has to pay the amount. He has to pay the amount equivalent to the credit in respect of input held in stock or input contained in semi-finished goods or finished goods held in stock or capital goods, reduced by such percentage points as may be prescribed. So payment can be by way of debit in the electronic credit ledger or by way of the debit in the electronic cash ledger. How much amount? Equal to the credit. Credit of input tax in respect of input held in stock, semi-finished or finished goods. So whatever the stock you have, equivalent ITC you need to pay. And if it is a capital goods, whatever the ITC you have taken, reduced by percentage point as may be prescribed. Correct? We will discuss 5% per quarter. So you need to reduce that percentage and then whatever the value comes that you need to pay as per 18 subsection 4. Now that if balance, if after that payment, if there is a balance ITC, then that will be lapse. Okay. Now 18 subsection 6 is very, very important section because it talks about supply of capital goods. Which capital goods? Which plant and machinery? On which you have taken the input tax credit. The registered person shall pay. Because if I'm supplying the capital goods, if I'm supplying the plant and machinery, I have to pay the tax. And in the GST, as per section 15, the concept is the transaction value. But 18.6 is saying you will pay the GST on transaction value or excess ITC claimed, whichever is higher. Eighteen subsection 6 says whenever you supply the capital goods, I can say prior to 5 year, before 5 year, where it is written 5 year because they are talking about the comparison. If I am supplying the capital goods before 5 year, then as per 18 subsection 6, I need to calculate the liability. I need to compare the liability by taking two amount, and whichever is higher, I need to pay that. Let's read the language of 18.6. In case of the supply of the capital goods or plant and machinery on which ITC has been taken, registered person shall pay an amount equal to the ITC taken on the said capital goods or plant and machinery, reduced by such percentage point as may be prescribed, or the transaction value. So from here amount equal to first is ITC on capital goods, which is reduced by percentage point. So जितना time आपने use किया उतना reduce कर दो. Then balance you need to pay. And second is tax on the transaction value, A or B, whichever is higher. A or B, whichever is higher. In case of the bricks, molds, dies, jigs, fixtures, which are supplied as scrap, the taxable person may opt to pay the tax as per section 15. It means transaction value. He is not required to compare the ITC. So this part is complete. Now we will move to the rule. But before that, let's take a break of 15 minutes and we will resume at 7:35. So 7:35 we will resume. And अशोक जी आप ब्रेक स्टार्ट कर दीजिए 15 मिनट में हम लोग Rule 40. What is the relevance of the Rule 40? Manner of claiming the credit in special circumstances. ठीक है. ITC claimed in accordance with section 18 subsection 1 on the input held in stock or credit claimed on the capital goods in accordance with the provision of the C and D clause shall be subject to the following. Clause A says ITC on capital goods in terms of the clause C and D of subsection 1 of section 18 shall be claimed, okay, after reducing the tax paid on the capital goods by 5% per quarter of a year or a part thereof from the date of invoice on which capital goods were received by the taxable person. क्या मतलब हुआ? It means that whatever the capital goods you have purchased, you can take the ITC, whatever the tax you paid on the capital goods, after reducing 5% per quarter or part thereof. It means I have used the capital asset for, let's say, 3 months or let's say 6 months. Then I have to reduce 10% per quarter, 5% per quarter, so total 10%. The registered person shall, within a period of 30 days from the date, become eligible to avail the ITC in the 18-1 or within such further period as may be extended, shall make the declaration in the ITC-1. So how he will take the ITC? He has to furnish the ITC-1 within 13 days. 13 days would be counted from eligibility to avail the ITC as per 18 subsection 1. ठीक है? Then it says that any extension of CGST, SGST, UTGST would be same. Declaration in the clause B shall clearly specify the detail relating to the input or capital goods. On the day immediately preceding the date from which you become liable to pay the tax of 18(1)(a, or the day immediately preceding the date of grant of registration in case he is claiming under clause B of subsection 1 of section 118, on the day immediately preceding the date from which he become liable to pay the tax in 18(1)(c or in 18(1)(d, immediately preceding the date when supply become taxable. So because you need to specify the date, because based on that the ITC would be, eligibility would be impacted. The declaration under clause B shall clearly specify the detail relating to input or capital goods. ठीक है? Declaration in ITC 01. So this ITC 01 should clearly indicate the date. Which date? Clause A, date of liability, clause B, date of registration, clause C, clause D. So whatever the date preceding that you are eligible to take the ITC, that date should be clearly mentioned. And the detail furnished in the clause B, that ITC 01, shall be certified by the practicing chartered accountant or cost accountant if aggregate value of CGST, SGST, UTGST or IGST exceed 2 lakh. So if the ITC ka amount is, total ITC is exceeding 2 lakh, then they have to certify chartered accountant or cost accountant practicing. input claimed in clause C and the clause D shall be verified from GSTR1 or as the case may be GSTR4 on the common portal. Let's read once again. The input tax credit claimed in accordance with the provision of the clause C and the clause D 18.1 shall be verified with the corresponding GSTR1 or the GSTR4 as the case may be. Now, in the clause C and the clause D, if you recall the provision, we are talking about section 10 become section 9 or exempted supply become taxable supplies. In both the cases, the person is registered in the GST. He is registered. Either he is registered under regular category or under composition category. If he is registered under regular category, then he can verify, officer can verify the detail from GSTR 2A to B. Correct? Because the purchase of the capital goods or purchase of the raw material, finished goods, semi-finished goods will appear in my GSTR 2A to B if I'm registered under regular category, but I was making exempted supply. And as a reason, I was not able to take ITC. Now that exempt supply become taxable supplies, I can take the ITC as per 18.1 C and D, or I am composition category, now become regular registered person. I was under composition, now become regular category of registered person. I can take the ITC. So 18.1 C and 18.1 D, it says that corresponding ITC ka detail has to be verified with the GSTR1 correspondingly to A to B or GSTR4. Correspondingly, it is appearing in my inward statement by which I can verify the details of the taxes. Rule 40, sub rule 2. It says that amount of the credit in case supply of the capital goods or plant and machinery for the purpose of 18 by reducing the input tax at the rate of 5 percentage point per quarter or part thereof from the date of issue of the invoice for such goods. So basically, they are saying 5% per quarter. That is no problem. Now let's move to the rule 41. अभी तक ठीक है ना, कोई क्वेश्चन तो नहीं है, एक बार देख लेते हैं. Okay. So Aniket and Prerna is saying 18.6. I have to explain once again. Fine, no problem. Before moving to the rule 41, let me explain the 18.6. So are you there, na? Prerna, Aniket, are you there, right? The person who has asked the question, I have to verify, confirm that he is there. And what is the purposes of form GSTR4? GSTR4 is basically क्या होता है? So if one is registered under composition levy, so the detail would be furnished in the GSTR4. So in case of the composition, it is GSTR4. In case of the regular, it is GSTR1. I have to explain once again. Okay. So I have purchased the capital goods on 1st January 2022. Simple example. The value of the capital goods is 1 lakh and GST was 10,000. I am just making it rounding figure. It would be easy for calculation purpose. I have purchased the capital goods on rupees 1 lakh and on which I have paid the GST of 10,000. Entire ITC I have claimed 10,000. Now this asset, capital asset on which I have claimed the ITC, I have sold after 1 year. Let's say I have sold on 31st December 2022 in rupees, let's say 5,000. The GST come 500 rupees. Then the question will come that is it okay I will pay 500 rupees because it is my transaction value. I have sold to the scrap dealer. Because this capital goods is become obsolete, no use. After 1 year, it is no use because it is technical obsolete. I cannot use for a production. I have sold to Kabadiwala at rupees 5,000. And logically, the 10% tax comes to 500 rupees. Section 18, subsection 6 will come into the picture. 18 subsection 6 will come into the picture. He says that compare two value. And whichever is higher, you need to take that. Clause, not clause, point number 1 and point number 2. I have to calculate two value. Let's say point number 1, taxes paid. I have paid 10,000 minus 5% per quarter. I have used for 4 quarter. 5% plus 5% plus 5% plus 5%. So total I have to reduce 20%. So one value comes 8,000 and second value tax on the transaction value 500. So whichever is higher, I need to pay 8,000 on the sale of capital goods prior to 5 years. This value comes because of 18.6. Now, how this value to be paid? It can be like pay the taxes of 500 on the invoice and reverse the ITC of 7500. That is absolutely okay. Total amount you have to pay is 8,000. Is it okay? एक बार confirm करें so that I can move to the next. Is it okay? 18.6. I have taken one example. It is nowhere related to ITC in case of the special circumstances, but it is talking about if you sold the capital goods or plant and machinery prior to 5 years, then you have to compare two values. Prerna, Aniket, Viraj, everyone, please confirm now 18.6 is clear or you want some more clarification or more understanding? Clear, na? Fine. And Viraj, you are saying repeat last clause of the capital goods, which proviso. You mean to say proviso? This proviso. Or under rule 40, you mean to say? So it says that provided that where the bricks, molds, dies, jigs, fixtures are sold as scrap, the taxable person may pay the tax on the transaction value. He is not required to compare because it may be the capital goods. It should not be treated as a capital goods, not required to compare the life of the 5 year. It can be liable to pay the tax as per the transaction value itself. Okay. Fine. So rule 40 is clear. And now I'm moving to the rule 41. What is the rule 41? Transfer of the credit on the sale, merger, amalgamation, lease, transfer of the business. What we have discussed? Let me read it once again. 18 subsection 3. 18 subsection 3 talks about that where there is a change in the constitution of the registered person on account of sale, merger, demerger, amalgamation, lease, etc., then shall be allowed to transfer the ITC, and for which he will use the form ITC02, which remain unutilized in the ledger of such, and in the ledger, and then he will transfer to such new entity, sold entity, demerged entity, amalgamated entity. For that, we are reading the rule 41. So rule 41, a registered person shall, in the event of the sale, merger, demerger, amalgamation, lease, transfer, or change in the ownership of the business for any reason, furnish the details of the sale, merger, demerger, amalgamation in ITC02 electronically on common portal, along with request for transfer of unutilized ITC lying in his electronic credit ledger to the transferee. Okay. Proviso says that in case of the demerger, the input tax credit shall be a portion in the ratio of the value of the asset to the new entity specified in the demerger scheme. So demerger, you are splitting your company. So in that case, whatever the percentage of the asset is gone or is being transferred to the new entity, in that ratio, you will apportion the ITC also. Now the point is that here they have used the word value of the asset. So the doubt was whether we will take the value only on which I have taken the ITC, or I will take the total asset. So that they have clarified value of the entire asset. Whether you have taken the ITC or not taken the ITC, you will take both to arrive that ratio in which you will do the apportionment. The transferor shall also submit a copy of the certificate issued by the practicing chartered accountant or cost account certifying the sale, merger, amalgamation, lease, transfer of the business has been done with a specific provision for the transfer of the liability. Okay. The transferee on the common portal accept the detail furnished by the transferor. So Air India has sold the business to the Tata. So the Tata will accept, the Air India will file the ITC02, and Tata will accept that ITC02 shall be credited to the credit ledger. Input and capital goods so transfer shall be duly accounted for by the transferee in the books. Now, 41 capital A, multiple place of the business within the state. In one state, you have opened the new registration. You have taken the new registration. Okay. In the registration chapter, there is a provision that you can take multiple GST number even in the same state. There is no problem. Initially, there was a concept of business vertical that has been omitted initially, yes, 2017 itself. So now, if I have the two place in the one state and I like to take two separate registration, I can go for two separate registration, or even if I like to take one registration, I'm okay. That please add that additional place of the business in your registration. That is okay. It is my choice. So rule 41A has been made if I am taking two registration within the state. Registered person who has obtained separate registration for multiple place of business in accordance with the provision of the rule 11 and who intend to transfer either wholly or partially the unutilized ITC lying in the electronic credit ledger to all or any of the new registered place of the business, then they have to furnish within 30 days detail in the ITC02A electronically on the common portal, either directly or through a facilitation center notified in this behalf by the commissioner. Provided that ITC shall be transferred to the new registered entity, same point in the ratio of the value of the asset, and value of the asset means total asset, irrespective ITC taken or not taken. Rule 41A, sub rule 2. It says that newly registered person transferee shall accept ITC02A. Once he will accept ITC02A, the ITC amount will be credited to the electronic credit ledger. Manner of reversal of the credit under special circumstances. Rule 44. Now there is some conflict. When I will explain the rule 44 and you will have some conflict with the rule 40. What is that? We'll discuss. Amount of ITC relating to the input held in stock, input contained in semi-finished goods and finished goods held in the stock and capital goods held in stock for the purpose of 18.4. 18.4. What is the 18.4? When you are reversing the ITC, you are registered under section 9 and now you are switched over to the section 10. Or your supply was taxable, now it become exempted. Then 18.4 says you have to pay the ITC equivalent to the ITC taken on that asset or capital goods. In case of the capital goods, you will take the reduction. It will reduce by some percentage point. Or it says by 29 subsection 5 be determined in the following manner. So, what is that manner? It says that for input held in stock, semi-finished and finished goods, ITC shall be calculated proportionately on the basis of corresponding invoices on which credit had been availed by the registered taxable person on such input. Because I have to calculate invoice wise. So the ITC which I have claimed on the invoice, I have to reverse that. For capital goods, shall be computed on pro rata basis, taking the useful life as 5 years. Now here, the concept is not 5%. See, if I talk about total 5 year, it will remain same. If I go by 5% per quarter, for 20%, for 20 quarter, it will be 100%. For 5 year, it will be 100%. So in totality, the answer would same. But what happened? If I will go by the rule 40, it says 5% per quarter or part thereof. Suppose I have used the asset for 3 years, 2 months, and 1 day. So in that particular concept of rule 40, I have to reverse the ITC, or I have to calculate the amount as 15%. And what is the 3 year? And 60, 75%, total 75% will come. मैं एक बार वापस explain करता हूं. There is a bit difference. If you will say the 5% per quarter, if you will say the 5% per quarter or life as a 5 years proportionately, what is the difference? In totality, there is no difference, because at the end of the 5 year, total both will become 100%. But if I calculate, let's say 2 months, 1 day, then as per the 5% per quarter, I have to reverse 5% for the quarter for 3 months or a part thereof. But in the 5 year, I will reduce proportionately. We have the another example we will discuss. For capital goods, the ITC remaining useful life in the month shall be computed. Remaining useful life in the month shall be computed by taking the useful life as 5 years. The amount as specified shall be determined separately for input tax of central tax, state tax, union tax, and IGST. Where the tax invoice related to the input held in stock are not available, the registered person shall estimate the amount based on the prevailing market price on the effective date of occurrence of any event or as the case may be 29.5. So market value के बेस पर मुझे ITC लेना पड़ेगा. Amount determined under subrule 1 shall form part of the output tax liability. Because I am switching from regular to the composition or my taxable supply become exempt. So I have to pay my tax liability or I have to reverse my ITC. Details shall be furnished in the ITC 03. What is the ITC 03? ITC 03 is the reversal of input tax credit. ITC 01, ITC 02 or ITC 02A is the taking the ITC, but ITC 03 is the reversal of the ITC. Where any event specified in 18.4 composition may convert हो गया या फिर मेरा supply exempt हो गया. And in GSTR 10, so what is the GSTR 10? It is called as final return. It is called as final return. What is the final return? So once the registration is being cancelled, then within 3 months from the cancellation order or from the date which I put, whichever is later. So within 3 months, the GSTR 10 has to be furnished by the person whose registration has been cancelled. So that ITC 03 basically the reversal of ITC. Detail furnished in accordance with subrule 3 shall be duly certified by chartered accountant or cost accountant market value. If you do not have the tax invoice, then you can take the market value, but that value has to be certified by the chartered accountant. Now the rule 44 subrule 6. What is that? The problem is for section 18 subsection 6, for section 18 subsection 6, rule 44 subrule 6 as well as rule 40, two provisions are applicable. But it says that amount of the ITC for the purpose of subsection 6 shall be determined in the same manner as specified in the clause B above. What is the clause B? It will be treated. So you are basically supplying the capital goods. So you need to pay the ITC, you need to pay the GST. It says that for capital goods, the ITC involved for the remaining useful life in month shall be computed on pro rata basis. So in 118.6, you are saying as per 44 rule 44, you will compute the balance month on pro rata basis and then calculate the ITC to be reversed. And then it says 5% per quarter or part thereof. What is the 5% per quarter or part thereof? Go back. Let me go back again. Rule 40. Subrule 2. The amount of the credit in case of the supply, the capital goods or plant and machinery for the purpose of 18.6. So now it become conflict 40 subrule 2 and 44 subrule 6. One is saying pro rata basis by assuming the life as 5 years. One is saying 5% per quarter or part thereof. Which we should prefer? Because I can say it's saying that calculated by reducing the 5 percentage point per quarter or part thereof. So you may use this 5% per quarter, but you have to give in the note. You have to give the note your assumption. You have to give the reference of the rule 44 subrule 6 also, because on 18.6, the two provisions are applicable. Why 5% per quarter is more appear to be correct? More appear to be correct. I'm not saying 100% it is correct. Which one is correct? Because there is a conflict. Why it is more appear to be correct? Now see. It says that reduced by such percentage point as may be prescribed. Now this particular language is being written in the rule 40 sub rule 2. This particular language is being written in the rule 40 sub rule 2. But in the rule 44 sub rule 6, it says that remaining useful life on pro rata basis. So exactly it is not matching with the language. But yes, if you are deciding to use a rule 40 sub rule 2, 5% per quarter, then please mention in your working that assumption that we have not applied we have not calculated according to the rule 44 sub rule 6. एक बार confirm करना, is it clear to all? Because this point was very tricky, so I have explained, but let it provides also where the amount so determined is more than that tax. See, where the amount so determined is more than the tax determined on the transaction value, the amount determined shall form part of the output tax liability and same shall be furnished in the GSTR. That is okay. Abdul is saying, can you explain 44 sub rule 1? Sure, I will explain. 44 sub rule 1. See, basically in 18 subsection 1, we were talking about we will take the ITC. We are taking the ITC. In the 18 subsection 6, we are basically paying the taxes. In this, we are taking the ITC, and in this 18.6, we are basically reversing the ITC to some extent. 18.4, we are also reversing the ITC or paying the tax. And 29.5 is basically related to the cancellation of registration. Okay. So, amount of ITC relating to input held in stock and capital goods held in stock for the purpose of 18.4, because in the 18.4, what is the 18.4? You become regular to the composition or exempt supply, taxable supply become exempt supply. So basically now you are not entitled to take ITC. So what happened? The ITC which is already available, you have to reverse. The point we have discussed in the 18.4, you have to pay the tax equivalent to the ITC of the stock and capital goods. Regarding the capital goods, we have to reduce certain percentage point. Correct. So now in 18.4, we need to pay. How much we need to pay? ITC equivalent to the stock and ITC of the capital goods reduced by certain percentage point. Now for input, they are saying it will be calculated proportionately on the basis of corresponding invoice on which credit has been availed. And if invoice is not, then in the next we have discussed, you will calculate based on the market value, and for market value, you will take the certificate. Input is clear, right? Now we are talking about capital goods. In the capital goods, it says, that ITC involved in the remaining useful life in month shall be computed pro rata basis. So whatever the remaining useful life in the month, then whatever the month remaining is there, you will calculate proportionately, and according to the liability, you will pay the tax 18.4. One second. We have one example. Let me do one example, and then I will ask that whether is it clear or not. Capital goods has been used in the 4 years, 6 months, and 15 days. And we are assuming he is registered under the regular category, and now he has shifted to the composition category. So 18.4 and rule 44 sub rule 1 will come into the picture. The useful remaining life in the month, you will calculate the remaining useful life 5 months, and ignoring the part of the month. ITC taken on the capital goods, let's say C, then how much ITC attributable to the remaining useful life shall be C multiplied by 5 divided by 60. Matlab, you will pay the ITC proportionate to the 5 month in the 18.4. And suppose this example is of, let's say, section 18.6. Suppose this example of 18.6. Then what we were doing? We are reducing the 5% per quarter for a full quarter or part thereof. So we can say 4 year, it means how much quarter? So 4 16 quarter plus 6 month, 2 quarter, and any part thereof, 1 quarter. So we will assume the asset has been used for 19 quarter, 19 quarter. And we will reduce 19%. Only 5% we need to pay. But here, only 5% means basically we are paying 3 month ka ITC. Here, we are paying 5 month ka ITC. Is it clear? Does it make any sense? Make it clear? Abdul, kindly confirm. And all are requested to confirm. This point I have explained 18.4 versus 18.6. Is that okay? Clear, na? Okay. So let's move to one circular 133. Circular number 133 has been clarified the following relations to the apportionment of the ITC in case of the business organization. What is the? For the purpose of apportionment of ITC pursuant to the demerger, the value of the asset to the new unit is to be taken at the state level and not at all India level. The transferor would be required to file ITC to only to those states where both transferor and transferee are registered. See, this is important restriction created by the circular. ITC 2 can be filed in same state only. A company XYZ is registered in 2 states, Madhya Pradesh and Uttar Pradesh. Total value is 100 crore, while its asset in MP is 60 and 40 in UP. It demerges a part of the business to ABC. As a part of the demerger, asset of XYZ amounting to 30 crore are transferred from MP, transferred to the company ABC in the state of MP, while asset computing amounting to 10 crore only are transferred to the ABC in state of UP. Those assets amounting to 40 crore at all India level are transferred from XYZ to ABC. So unutilized ITC of XYZ in the state of MP shall be transferred to the ABC, that is 30/60, not on the basis of all India ratio. Similarly, unutilized ITC of XYZ in the state of UP will be transferred to the ABC in the ratio of the value of the asset in the state of UP 10/40 is equal to 0.25. Okay. So that will be the ratio, and this ratio will be applied for basically, I can say, transfer of ITC. We need to calculate the proportionate. The ratio of value of the asset shall be applied to the total amount of unutilized ITC. The said formula need not be applied separately in respect of each head of the ITC. Further, the said formula shall also be applicable for apportionment of cess between the transferor and the transferee. Okay. Total amount of the ITC to be transferred to the transferee shall not exceed the amount of the ITC to be transferred, जितना calculate किया. However, the transferor shall at the liberty to determine the amount to be transferred under each tax head within this total subject to the ITC available with the transfer under the consent tax head. So they have given the example. Let's read the example of two. A second. Refer point 2 about. So let's read once again this. The ratio of the value of the asset shall be applied to the total amount of unutilized ITC of transferor. That is sum total of CSI. The said formula need not be applied separately in respect of each head of the ITC. Further, the said formula shall be applied for apportionment of the cess between transferor and transferee. The ITC balance of transferor X in the state of Maharashtra under the head this, pursuant to the scheme, X transfers 60% of its asset to the transferee B. Accordingly, the amount of the ITC to be transferred from A to B shall be 60% of 20 lakhs. 10 plus 5 plus 5, 20. That is 12 lakhs. Now, the total amount of the ITC to be transferred to the transferee should not exceed the amount of the ITC to be transferred. However, the transferor shall at the liberty to determine the amount to be transferred under each tax head within this amount only, subject to the ITC available. Let's take one example. They have given the example in the circular itself. State Delhi asset ratio of transfer is 70%. Tax head CSI and total ITC balance is 50 lakhs. ITC balance of the transferor pre-apportionment as on the date of the filing of the ITC 02. Total ITC, see, ITC balance of the transferor. So this 50 lakh. Total amount of ITC transferred to the transferee under ITC 02, 70%, 50 lakh, 35 lakh. ITC balance of the transferor post apportionment after filing ITC 02. So what is the balance? 35 lakhs. So they will transfer C as then balance I. Similarly, they have 40% of Madhya Pradesh ka ITC 70 lakh, iska 40% is 28 lakh. They can apportion in this ratio, complete I and then C and S balance part. It is not necessary that 40% should be headwise. It should be in totality. 40% not necessary, it should be headwise. See, if you calculate 40% of 25 lakh, it comes 10 lakh, but only 3 lakh is being transferred. 20 lakh, entire 20 has been transferred. The apportionment formula shall be applied on the ITC balance of the transferor as available on the date of the filing of ITC 2. For the purpose of apportionment of ITC, the ratio of value of asset shall be taken as on the appointed date of the demerger as specified in the respective scheme for demerger. Thus, for the purpose of apportionment of ITC, the ratio of value of asset taken as on the appointed date of the demerger should be applied on the ITC balance on the date of the filing of ITC 02. Okay. So I hope this circular is clarified. Any question, kindly ask. So please listen. Please make a note that we will have the tomorrow. We will have the tomorrow also class 6 to 9 p.m. in the evening, and then we will try to complete the theory. Little bit part would be pending that we will take on the Tuesday 6 to 9, and in the Tuesday almost in the first 1 hour, 1.5 hour, I will complete the balance theory, and then we will start the practical discussion. All the provisions that we have discussed, we will take the practical part, practical question. Now, ISD. What is the concept of ISD? I have to explain. Let me see the question, if any. There is no question. So, can you tell me what is the ISD? What is the ISD? Can you tell me what is the input service distributor? In the GSP, what is the concept of input service distributor? What is the concept of input service distributor? Input service distributor is a concept by which head office can transfer the ITC to the branches. Now, that is most debatable. It is also debatable topic. Why? See, suppose, and there is a question is being raised because of the schedule 1. First, try to understand the concept, then we'll move to the section 20. Head office has taken the registration under the ISD category. So it is a separate registration. It is not regular category of registration. In the regular category of registration, so normally we are required to file the GSTR 1 and GSTR 3B ITC to be taken based on 2A, 2B, etc. So in case of ISD, head office has to take separate registration. Separate registration. Why there is a requirement of separate registration? Because this concept says input service distributor. It means if the ITC on account of the input service only, if the ITC is on account of the input service only, can be distributed to the branches in the turnover ratio. We'll discuss in detail. Okay. But what is the crux? If I have the ITC, which is taken for the benefit of the branches, I am head office. Let's say I have conducted the statutory audit function for all my branches. And audit is not only for the head office. Audit would be for entire organization. So head office can distribute the ITC of this input service. One point is clear. This should be distributed only of input service. It cannot be internally generated service. It cannot be transferred for goods. It means there has to be some tax invoice. So I am head office and you are my branches. So I have received one tax invoice in my ISD number. So there is a ISD GST, separate GST registration. So that person, let's say, is a chartered accountant and he has done the audit for my entire organization. So I will take the invoice in my head office at ISD number, and from ISD number, I will file GSTR 6 to distribute the ITC among my branches. And this distribution we will discuss in detail, but broadly, I can say it is on the basis of capital, in the basis of turnover ratio. Taken. So that is the entire concept, overall broader term. Let me discuss in detail. Distributing the ITC, absolutely correct. And now, what I was talking about, uh, Schedule 1. What is the Schedule 1? Para 2. It says that Schedule 1 Para 2 says that supply of the goods or services or both between a related person or between distinct person. So now try to understand that this head office and branches, are they distinct person or not? Just confirm. Head office and branches, are they distinct person? Are they distinct person or not? Just confirm. Head office and branches, are they distinct person or not? Answer is yes, because one PAN multiple GST, it is a distinct person. One PAN multiple GST, it is a distinct person. So it is a distinct person, no doubt about that. So Schedule 1 will not come into the picture. Supply between distinct person is treated as supply, and in case of the supply, I have to raise the tax invoice. Schedule 1 cover both goods as well as services. So there is parallelly one conflict, that is it mandatory to go for ISD or I can go through cross charge. What is the cross charge? As per Para 1, as per Para 2 of the Schedule 1, supply between distinct person is treated as supply, and if something is a supply, I have to raise a tax invoice. So can the ITC, instead of distributing, can we raise the tax invoice? That is big confusion, but probably it will be the later on, it will be clarified. But for your understanding, Section 20 would be applicable only for services. Distributing outsider invoices ka ITC, it cannot be internally. Services can be distributed through ISD mechanism. No, ISD, some have invoices on which he has paid the taxes, and that taxes is for the branches. The ITC can be distributed to the branches in the turnover ratio. Fine. So Section 20. Let's start Section 20, and tomorrow we will have the class. Ensure to join the class because we are going to discuss the balance part. Section 20, the ISD shall distribute the credit of central tax as central tax, of integrated tax as integrated tax, or central tax. It means C can be transferred as C, but I can be transferred as C, or it can be transferred as I, by way of document containing the amount of input tax being distributed in such manner as may be prescribed. Okay. Then it says that input service distributor may distribute the credit subject to the following condition. ISD may distribute the credit subject to the following condition. Credit can be distributed against the document. Perfect. Amount of the credit distributed shall not exceed the amount of the credit available. जितना इन होगा उतना ही तो आउट करेगा, उससे ज्यादा तो आउट कर नहीं सकता, राइट? Credit shall be distributed only to that recipient. See, you cannot distribute the ITC to any other branches to whom it not pertain. So ITC should be transferred to the branch जिससे ये belong करता है. The credit of taxes paid attributable to more than one recipient shall be distributed on pro rata basis in the turnover ratio during the relevant period to the aggregate of the turnover of all such recipient to such ITC, such input service is attributable and which are operational in the current year during the relevant period. So it simply says Let's say I have the ITC of 10 lakh, which I need to distribute to my 3 branches. One has the turnover of 6 lakh, one has the turnover of 3 lakh, and another has the turnover of 1 lakh. So I will distribute this 10 lakh in the ratio of 6:3:1. Basically, what he's doing, he's saying that 10 lakh multiplied by turnover in the state or UT of that state and total turnover. Total turnover only of those states to whom you need to transfer the ITC. I have the 5 branches. I have the 5 branches, but I will not take the turnover of the 5 branches. Why? Because I will take the individual turnover and the total turnover only of those states to whom this ITC belongs. Let me read once again. It says that credit of tax paid on input service, that is clear, na, ISD, attributable to more than one recipient, then it shall be distributed among such recipients to whom the input service is attributable. Perfect. And how it will be apportioned? On pro rata basis. On what ratio? In the turnover in the state or UT. And divided by aggregate turnover of all the state? No. It says that all such recipient to whom input service is attributable. So if I have the 5 state GST number, I will not take the turnover of all the 5 states. I will calculate the ratio of only 3 states to whom the input service is attributable. Now it says that credit of tax paid on input service attributable to all recipient of the credit, okay, shall be distributed to such recipient and such distribution on pro rata basis of the turnover in the state or UT during the relevant period to the aggregate of the turnover of all recipient and which are operational. If it is belongs to all, then obviously I will take the aggregate turnover of all recipient. Relevant period means if the recipient of credit have the turnover in the financial year preceding the if the recipient of the credit have turnover in the state or UT in the financial year preceding the financial year during which credit is attributable to the said financial year, or if some or all of the recipient of the credit do not have the turnover in the state or UT in the financial year preceding the year during which credit is to be transferred, the last quarter for which details of the turnover of all the recipients are available previous to the month during which such credit is to be distributed. Oh my God, what happened? Relevant period is divided in 2 parts. The first part is if recipient to whom you are transferring the ITC have the turnover in the state or UT. In which year? In the financial year preceding the year during which credit is to be distributed. Let's say we are distributing the credit of the current year. So have the turnover in the 22-23. If yes, then said financial year is the relevant period. Said financial year is the relevant period. Now let's say if some or all does not have the turnover in current year in which we are distributing the ITC. No, sir, in the last year, in the preceding financial year. No sale in some or all. Then what would be the relevant period? They are saying last quarter. Which last quarter? For which details of the turnover of all recipients are available previous to the month during which credit is to be distributed. So let's say we are talking about the November month, then we will take the previous quarter, September, or in any quarter in which they have the turnover. The expression recipient of the credit means the supplier of the goods or service or both having the same permanent account number as that of ISD, obviously. So we have discussed the concept of distinct person, one PAN, multiple GST. Recipient of the credit obviously should have the same PAN number. Then only it can be transferred by HO2 branches, means PAN number to एक ही है इनका. The term turnover in relation to any registered person engaged in the supply of the taxable goods as well as goods not taxable under this act means the value of the turnover reduced by the amount of any duties or taxes levied under entry 84, 92A of the list 1 of the 7th schedule, entry 51 and 54 of the list 2 of the schedule 2. So that we will discuss in the practical aspect in the analysis part. Basically, they are talking about that in the turnover, we will not count the turnover of the on which excise duty is leviable. So like alcoholic liquor for human consumptions, petrol, etc. Okay. Manner of recovery. Section 21 says that if you have transferred excess credit to the branches, you have to recover that credit. Section 21 says that you have to recover that credit which you have transferred extra. Okay. So that is very small. So rule 29 we will take up tomorrow. Okay. Where the input service distributor distribute the credit in contravention of section 20. Okay. Then the excess credit shall be recovered along with interest and the provision in accordance with 73, 74. Mutatis mutandis shall apply determination of the amount to be recovered. So, okay. So it's section 73, 74. It is the penalty provision. It is the penalty provision. What is the penalty provision? So section 73 and 74. There is 5 mistake. What is the 5 mistake? Tax not paid, short paid, erroneously refunded, ITC wrongly availed or wrongly utilized. Or if these 5 mistakes are because of the non-malified intention, there is no intention of the fraud or malified, but the mistake was there, then it is determinable according to section 73. The penalty percentage would be 0 if you pay before notice. Penalty percentage would be 0 if you pay after notice but before order. Penalty percentage would be 0 if you pay within 30 days. Only after 30 days, there would be the 10% penalty in case of section 73. That we will discuss in the relevant chapter, again in detail. In case of 74, the mistake are same. Tax not paid, short paid, erroneously refunded, ITC wrongly availed or utilized. But these mistakes are with malified intention, fraud, willful misstatement. Then in that case, amount can be recovered under section 74. In case of 73, the total time limit to issue the order is 3 years. But in 74, the total time limit to issue the order is 5 years from the due date of annual letter. Okay. And in the 74, there is no relief from penalty. Before notice, 15%, after notice, before order, 25%, and then 50%, then 100%. So minimum penalty is 15%. Again, we are going to discuss this provision in very, very detailed in the relevant chapter. But today we are concluding at this point. Tomorrow we will start from rule 39. But now, if you have any query, you can ask. Otherwise, I will start the quick round of the question answer. Whatever we have discussed today, we'll try to do the revision. Any question? So fine. Let me start the quick round of the question answer. Next 15-20 minutes. Today we have started first circular 92. If I have given the amount, I have given the item as gift, free sample, and suppose that particular free sample is treated as supply, do I need to reverse the ITC on this gift? I have given the gift or free sample, and this free transaction becomes supply as per the schedule 1. Question is, do I need to reverse the ITC on that particular gift or free sample which becomes supply as per schedule 1? मतलब अगर मेरा ट्रांजेक्शन गिफ्ट का वो टैक्सेबल बन जाता है बाय ट्रीटिंग द सेम एज ए सप्लाई, ठीक है, देन इन दैट केस कैन आई टेक द आईटीसी और आई हैव टू रिवर्स माय आईटीसी? डू आई नीड टू रिवर्स माय इनपुट टैक्स क्रेडिट? The answer is no. I'm not required to reverse my ITC because if it becomes supply as per schedule 1, then you are entitled to take ITC. The 17.5H would not be applicable at all. Now, can you tell me that we have discussed some discount treatment in the GST? So can you tell me if the discount has been given on the face of the invoice itself, the GST would be charged on the gross value or net value after discount value? If the discount has been given at the time of the supply, and if the discount has been given at the time of supply, it means I am a supplier, I'm issuing the invoice by reducing the discount amount. So the GST need to be charged on the gross value or GST need to be charged on the net value? The answer is on net value. Answer is on not net value. Can you tell me that if the discount has been given after the supply, if the discount has been given after the supply, then there are certain conditions which we have discussed in the 15 subsection 3 clause B. If it is satisfied, then yes, discount can be excluded from the value. Can you tell me what are the conditions? If the discount has been given post supply, if the discount has been given post supply, then 15 subsection 3 clause B is talking about certain condition to be satisfied. If satisfied, then yes, discount will be excluded from the value. What are the conditions? There has to be the agreement. ITC has been reversed by the recipient and it should be linked to the relevant invoices. Correct. Next question is, we have discussed section 18 ITC in case of the special circumstances. Okay. So there are 4 circumstances in which we can take the ITC. In 2 transactions we are talking about, in 2 situations we are talking about ITC on input service. Sorry, ITC on the raw material, ITC on input only. And in the balance 2 category, we have discussed ITC on input and capital goods. Can you please tell me what are the 2 circumstances in which we are entitled to take the ITC even on capital goods also? What are the two situations wherein we can take the ITC? In case of the special circumstances, we can take the ITC on input as well as on capital goods. Fine. So the answer to this question is composition to regular and exempt to taxable. Oh my God. Very nice. Very nice. Muhammad Abdul Rahim. Very nice. Really appreciate it. Can you tell me the two situation in which we need CS certificate? In the entire today class, we have discussed at two places that we need CS certificate. When? कहां पर हमने सीए सर्टिफिकेट या सीडब्ल्यूए सर्टिफिकेट की रिक्वायरमेंट पड़ी थी? Very nice, Prerna. You have also given the correct answer. Aniket, very nice. हमने आज की क्लास में दो जगह सीए सर्टिफिकेट की बात की थी. कहां कहां पर बात की थी? First, we have talked about correct. One is when we are filing the ITC 01 and giving the date, basically, so we need to file the ITC 01 and we have to file the declaration in the ITC 01. Then the declaration should be certified by the chartered accountant or the cost accountant. At one more place, we need the certificate. Can you tell me? In the rule 44, we have discussed manner of reversal of credit. Correct. In that case, we have discussed 18 subsection 4 or 29 subsection 5. Right. We have discussed in that it shall be duly say if the tax invoice is not available, then you will take the market value, and for the market value, we need to provide the CWA or CA certificate. Then one more place, ITC 02, we have discussed that the transfer has been done that within specific provision regarding the transfer of the liability, right? At three places we have discussed. If it exceeds 2 lakh, right? Value cannot be determined. Yes, yes, yes. When there is a change in the constitution and with specific provision of the transfer of the liability. Correct. All are correct. All are correct. Very nice. Now, uh, in the rule 40 and in the rule 44, there is difference in the computation of ITC on capital goods. What is the difference? In the rule 40, we have discussed some method to calculate the ITC on the capital goods. Similarly, in the rule 44, we have discussed some method to calculate the ITC. Can you explain the difference between rule 40 and rule 44? Rule 40, we have discussed 5% per quarter. We are taking the, or part thereof, we are taking the basically ITC, which is to be reduced 5% per quarter or part thereof. And in the rule 44, we are basically computing the ITC on pro rata basis for balance life in months. Any part we have to ignore. So that basically is that particular contradiction. So can you tell me that we can take the ITC? See, 18.1 we have talked about ITC in case of the special circumstances, capital goods. Regular become composite become regular, or exempt become taxable, or I have taken the registration voluntarily or mandatorily. So there was a provision that this invoice should not be older than how much period? You can take the ITC if the invoice should not be older than how much period? 6 month, 1 year, 2 year, 5 year. कितना पुराना नहीं होना चाहिए? You can take the ITC only for बहुत बढ़िया यार. अब्दुल रहमान, sorry, Abdul Rahim, Mohammad Abdul Rahim and Prerna Kochar. Very nice answer. Very nice reply. Thank you. The answer is only 1 year. Only 1 year. Correct? Answer is 1 year. In case of cancellation of registration, we have to file one final return. Can you tell me the form number of that final return? Final return का form number. And what is the time limit within which that final return has to be filed? कितने टाइम के अंदर वो फाइनल रिटर्न फाइल करना है? What is the time limit within which I have to file the final return? GSTR 10, right? GSTR 10. What is the time limit within which GSTR 10 has to be furnished? Within 3 months, correct? GSTR 10 and within 3 months. GSTR 10 and within 3 months. Reversal of ITC का form number? When I need, which form number we need to furnish for reversal of input tax credit? The answer is For reversal of ITC, which form number? ITC 03. ITC 03. And can we take more than one registration within the same state for same nature of business? Can we take more than one registration in the same state for more than one place of the business, but business is same? State, same business. I have the two place. So can I take separate registration? Can I take separate registration? Answer is yes, no problem. What is the problem in that? What is the problem in that? You can take. If we are taking, then we can transfer the ITC by which form? We can transfer the ITC by which form? We can transfer the ITC by which form? In the same state, we are taking the separate GST number. My question is, how the ITC can be transferred? By which form? ITC 02A. In the ITC 02A, we are basically calculating the asset transfer divided by the total asset. In the total asset, we are calculating, we are taking the asset on which ITC taken, or we are taking complete asset. We are taking complete asset for determining the ratio, or we are taking the ITC, we are taking the capital asset, we are taking the value of the asset on which I have taken the ITC. Only ITC वाला asset लेना है या total asset लेना है to determine the ratio by which I can transfer the ITC through ITC 02A or ITC 02. So from my side, today class is completed. Over to you for asking any question. We'll wait for 1 minute and then we'll conclude the class if you do not have any question. Tomorrow we will have the class in evening, same time. Please ensure to join the class, ITC next class, because we have the gap in the previous. So I'm taking that particular class extra. Any other question? Total value of the asset. Total value of the asset. Correct. We will take the total value of the asset, not the only asset on which I have taken the ITC. Total asset I have to take, whether ITC taken or not taken. So thank you very much. Good night to all of you. We'll meet tomorrow at same time and we'll complete the balance part. Probably we would be able to close our balance part, or max to max it will go one more day, half more day. Ensure to attend the last two classes because we are going to discuss practical part a lot. ठीक है, सो अशोक जी आप क्लास वाइंड अप कर सकते हैं.